Hi, good afternoon, everyone. Very warm welcome to all the participants for taking time out for this discussion on decoding budget 2026. So, budget is one of the most important activity in the year that takes the country forward, sets the direction for what's going to happen. It's also a moment to do a reality check of what's going on and how should collectively the country respond. And this budget 2026 is coming at a time of massive geopolitical global sort of stress and uh, am I audible? I'm just seeing a message, low sound.
You're audible to me, Pankaj.
Okay. So it's coming at a time of massive changes and stress at a global situation. Just to sort of count a few, and that will give a direction for the context for this discussion. So we have the largest country on the planet, the US, having such a massive debt to an extent where their interest payment for the year is larger than the defense budget for the year. So really, that's the state of the world we are in. The largest economies such as US, Japan, they have very high inflation, and that is sort of affecting their own well-being. Also, it's affecting how their geopolitics is shaping, and we are seeing so many events occurring that sometimes it's very hard to connect the dots. So there was geopolitical sort of event in Ukraine, then there's something happening in Venezuela, then in Iran, and we don't know, what else is there, maybe Taiwan or other things. In our own sort of country, there's national security event. So last year we had Operation Sindoor, and technically we are still in the state of war. So that operation hasn't really concluded. But given all of that, despite all the chaos, India is still in a better place, right? So I think in general there is consensus that economy is growing well, inflation is under control, and the interest rates are low. So these are all the right conditions for the country to grow forward. So in this situation, we have to sort of look at the budget in three different steps. And that's how this conversation today is going to be structured. So we start with the context. So what's really going on in the world that should shape our budget, that ought to have shaped the budget, and we'll sort of unpack that as the first point. The second point is we'll actually deep dive into the budget and look at the content of the budget. So what is really written in the budget, what is good, what is not so good, what's continuing from previous budget thinking to this, and what's really a strategic change. So that's the second step, that's the content. And the last step is really looking at the consequence. So given the context, given the content of the budget, how should the changes that are coming, how should they influence our portfolio thinking? How should they influence the personal finance thinking, the investment thinking? So really, those are the three steps. So we have context, then we have content, and then we have consequences. My name is Pankaj Singh. I'm a SEBI registered research analyst, founder of smartwealth.ai. And with me, I have three panelists who have very rich, diverse experience. They are all three market participants and practitioners. So with that, let me just introduce the panel. If we can go to the next slide, Kavya. So we have Divam. Divam is CEO, co-founder of Green Portfolio. He's a chartered accountant. He holds an MBA in finance from ISB. He has prior experience in the financial industry. He runs a PMS as well as an AIF. Overall, more than 20 years of experience. Then we have next Shashank Udupa. Shashank is founder of Vayu Capital. He's a former investment banker and a serial entrepreneur. He has more than 10 years of experience, and he brings a unique angle of market education experience. So how really retail investors think, he has direct insight to that, really bringing unique angle there. And he himself is a practitioner of quantitative based investing. Then we have Sanjeet Singh of Modular Capital. If you can move on to the next slide, please. So Sanjeet is principal officer of Modular Advisory. He's a second generation entrepreneur, more than 2 decades of experience. He's an engineer and MBA in finance from ISB Hyderabad. Again, specialist in different styles of investing. So blending quantitative with fundamental with technical, and again he has a lot of experience in advisory as well as coaching for success. So with this diverse background, we have the fund managers, we have training and advisory angle, then we have actual system building angle. So really, I think with this we'll have a good rich mix of conversations. So, with that, let me move on to the first topic, which is what is really going on in the world. Can we just unpack what's going on in the world that should have affected the budget, that might have affected the budget, and in that context, then we'll move on into what is in the budget. So, with that, passing on to you, Divam, if you can share your thoughts on what's the context for this budget.
Thank you so much, Pankaj. Hello everyone. So, as we all know that we are in a significant shift in the world. We are seeing a change in the world order. We this all this started with Russia Ukraine, which primarily is more towards a war of commodities, and we have seen similar kind of a escalation. So this is not the first time we've seen US trying to have an control of Afghanistan in the past, where there are significant resources and similar kind of geopolitical events. And now, suddenly, with the advent of AI, with the advent of technology, the war of commodities has escalated. And particularly in terms of commercialization, these wars are happening, and there are a lot of fights geopolitically. Right, we have seen Greenland tussle coming up. We've seen Venezuela, the oil kind of in a way acquisition by America. We've seen Iran being US and Israel trying to penetrate there. We've seen Taiwan, where China is trying to penetrate. So, likewise, overall, the economy is shifting towards a scenario where geopolitics is becoming increasingly active, and we are moving towards a fight for resources, right? And that those fight for resources, in a way, like we've seen in certain areas, like if you look at copper, the mining activity is pretty much a challenge, and we've not seen new mines coming up in copper. Whereas if you look at copper, it is a very important metal when it comes to a lot of industrial inputs. And considering that there is scarcity, there's no visibility, as the demand would outperform the supply by 2030. And when that happens, the price is going to go significantly up. Likewise, gold, again, we are moving towards a scenario where we are moving towards de-dollarization, and gold is becoming increasingly more relevant in terms of printing money. And we're going back to gold standards. Again, gold is becoming a critical resource for a lot of economies, and we have seen countries shifting their capital from dollar reserves to gold. Likewise, if you look at commodities, other commodities also, there's significant inflation wherever a lot of commodities. Silver is becoming an increasingly precious commodity. Palladium, platinum. If you look at a lot of other basic commodities, every country is trying to secure them for the future. Countries are trying to buy mines. Countries are trying to, in fact, invade other countries to get access to various commodities. So these are like times which are evolving pretty rapidly. Next slide, Kavya. So. So, if you look at the India's market, again, another thing that is happening currently is that there is growth normalization. We've seen significant growth in the earnings post the COVID. there was a base effect. We saw significant growth. We saw significant spending. There was a lot of liquidity in the economy, and the growth was pretty good, and that resulted in good earnings from the markets as well. But over the last since we are going into a re-globalization or FTA kind of a regime, as well as the input prices, the commodity prices are increasing, as well as the kind of disruption that is happening. We are seeing normalization of growth. We have seen capex is also coming down over the last few quarters. If you look at private capex, or if you look at government capex, although the government is trying to scale up the capex again, but but still, if you look at India's earnings versus the rest of the world, we still look fairly robust, despite the disruption. I'm going to talk about it in the later section as well. That despite the development we are seeing, the economy is showing resilience, and the company is showing resilience, and so the kind of commentaries that we have seen from the companies over the last over this quarter earnings, and the kind of growth that the companies are looking at going forward looks good. We have not The private capex has not happened, but it seems like with the new trade deal and the kind of budget that is being presented, we should go more towards the private capex formation. So I think this is the reality. India's market is going towards maturity, whereas we see that the outlook looks fairly positive versus where the rest of the world is heading. That's what is reflecting in the kind of GDP numbers as well as the expectations of the economy. So if you understand the market volatility, a lot of investors that were there, they have not seen this kind of a volatility because a lot of investors were new to the markets, and this is a reality check. We as long-term participants in the markets have seen a lot of such cycles in the markets, but this is something new to a lot of investors, and we have seen panic from these investors over the last 1 year, as 3-4 quarters of cycle, 4 quarters of negative cycle has been seen in the markets, and especially there was a bloodbath in the small and mid cap space. But if you look at traditionally, these kind of cycles are like very much there, and you see these cycles coming. Market would never go up one side. It is always a cycle. It will always go up and down. So you have to take these with a pinch of salt, and you have to, I think, evolve your strategies in different kind of market cycles. Market volatility has been definitely a cause of worry for a lot of investors. There have been a lot of geopolitics, a lot of other changes that are triggering them. But you have to look at it from the angle that these kind of cycles are a part of the journey of the markets.
Thanks, Divam. So, Shashank, your take on it, what problems exist that need solving?
See, I think, as you rightly said, Pankaj, in the start, that this year we've got hit from all sides, right? I mean, geopolitically and internally, there has been too much going on. One, I mean, the whole trade imbalance that was started with US, the dollar going down. In fact, last year, INR also did quite bad on the global scale. The FIIs started moving out. They started going and investing in countries like South Korea and Greece and whatnot. China also on the other side is growing their dominance. Absolutely wonderful from their side. And they're also clearly showing from the global standpoint that, you cannot compete with them, but, you might as well take their help and do something there, right? So I think comparing us and China or any other country, I think they've fairly put the point that they're quite far ahead. Having said that, India has its own place in the world economics, and that is what I think is the most important thing. We did have a few misses, and I still feel that there are some misses even today that has not been addressed. For example, we missed the entire AI race, and that is also a testament today, where you see Claude Cowork coming out with their automation plugin, which has actually put all our IT stocks down, right? So that is something we really missed, and I still feel we underestimate that a little bit. We had a weak INR in the past. The government was also facing high tariffs, almost up to 50%, which was not good at all. And we also had a war last year, and we had our defense relook at our entire defense program. We cannot be dependent on either US or France or anyone to like import defense as well, right? So all of these things were, I think, a big miss for India, and that is why this budget was very important to solve, if not all, at least most of those issues, right? And I think step by step, the government of India did take into consideration these problems. I think the first address for the AI race miss was the data center um, advantage they gave in the budget, right? And I feel that is a very significant advantage. I think I put that in the next slide, which is the solution that they did slowly. So I think that is something that they really did well with the data center part. With the weak INR, I think now they have finally closed the US trade deal. They also did the EU trade deal. There are many trade deals going on, the sister deals, mother deals, father deals, all done, right? So, I mean, now I feel that there is a good enough reason for the FIIs to start coming back in India with the INR becoming stronger. Kavya, if you could just go to the next slide, that would be great. Yeah, so I think now they have a good reason to honestly come in back into India. I know euro is becoming stronger because dollar was falling, but I think now they can start looking at India again. And with us now going to EU and US, along with mining, along with defense, I think there's a lot of place to play over there, right? Revenue miss, I think this was the year of fiscal consolidation, and we knew that. I think everyone knew that, but there was some hope in the budget that something major will happen. So if you looked at the budget as well, till she announced STT, I think the market was flat, pretty much absorbing everything else. I think that was when the whole knee-jerk reaction came into the market as well, right? Kavya, if you could go to the next slide as well. So I think overall, see, India was, I mean, last 1 year or last 15 months was not good at all. But I would not completely blame us, because we were also hit from many different angles, and we were actually put in a spot where we had to take into consideration a lot of moving factors from the world, right? Whom do we align with? Whom do we stand with? Our allies were not our allies. Allies were acting funny and all of that. So I think this budget was quite good, and I would not say this was I would not say this was revolutionary, but I would say this is a stepping stone to maybe the next 2-3 budgets that would come. So we will lead up to something in the next few years.
Got it. Thanks for that, Shashank. So, Sanjeev, in your view, what are the ambient conditions globally, locally, that are influencing or should influence the budget, should have influenced the budget?
Sure, Pankaj. So let's think from what the finance minister said, and reflects what the whole of the government is thinking, rather than my approach towards this is what she said is what she's focusing on, and then where is the money going, according to her. So globally, we have seen protectionism and tariff wars initiated by Mr. Trump, and then it spread through. What it has done is that everybody is looking out for their own, and the cooperation is going down. So India wants to keep competitive in that space, because to lower down the duties so that they can protect their own people. Then there has been a supply chain issue wherein some important components for semiconductors, for pharmaceuticals are imported. So now when everybody is looking to be on their own, you would want to have some of these components be made locally, or be imported easily. So that is one thing happening. And then of course there's geopolitical security. We had a hot war happened last year, and then we got to learn a few things about our own defense systems and a few things about the neighbor's defense system. And then it has been a theme around the globe where something or the other is happening. Somebody is trying to push into somebody else's boundary. So there's a big risk for geopolitical security. That is what the finance minister focused on. They say that we have a big army, we have a big air force. We don't have a very big air force, and we have a fairly okay shipping line around the navy. So we need to spend money over there, and then warfare is moved from conventional guns to drones and everything else. So yeah, we are looking to make that happen, and not at the same time rely on outsiders for big tech. it's high time that if we have a country this big, that we should look at our own tech, indigenous gone. There's a bunch of circuitry which we still import from countries around us, especially China, to run stuff which is critical to our own safety against anybody else or even the neighbors. And of course, because each country is trying to look for themselves, there has been a weaponization of resources. Somebody's trying to control silver, somebody's trying to control lithium. So, and all large metals and small metals, which are essential to live in the electronic world, are being regulated and controlled, and put a ban on. So, we are again trying to look inwards to get those rare earth metals. Like, next slide, Kavya. So locally, what is happening? We have had fast growth, great, economic numbers, and fastest growing economy, but uh, it is mostly, from a demand basis and not from a productivity basis, that we have been doing that. Manufacturing has been stagnant. So the finance ministers wanted to, address that. And the good shift from mindset is that instead of giving away money to people, let's give them jobs. And then one of the best ways to do that, and in an economy in a country where everybody is not very highly skilled, is to push for infrastructure capex, so that at least the root level people get to have a job and spend money. So no more tax cuts we saw, because I think the headroom for giving those tax cuts has already been achieved. And if we want to, continue to reducing our debt and keeping it within line of, the target is, so we cannot cut more taxes. In fact, more taxes have come. India does have a bad habit of speculation, right? Some of it is good, some of it is bad, some of it brings liquidity, but most of it brings losses. So yes, STT will probably try to cut down speculation, but it is also equally likely that speculation may not be cut down and people might end up paying more taxes, which is a win-win for government in both sides. So there's a consolidation glide path, and STT fits into there.
Great. So thanks for that, Sanjeev. So with that, we are wrapping up the context. And what I gather is a few, three, four takeaways. So world order is changing, and there is a tendency for resource hoarding, weaponization of resource. There is increasing, dynamics involving trade, tariff, technology. And in our own sort of world, there have been hits and misses, and there is some recalibration to sort of get better with that for future. And there is also need and some direction of fiscal prudence. So that's a great context. Now let's sort of take the conversation one step ahead. So what is the content of the budget? So really plunging a little bit deeper and seeing where is the money being deployed, right? So how are we doing something more to raise the capital and raise the government revenue? And where are we going to deploy this? So what new themes are emerging? Is there some sort of continuity in themes? Is there any strategic shift? So, to get started with that, Divam, if you can, share your thoughts on what is in the budget.
So I was discussing it with the team. So if you look at the budget, it looks like a corporate, right? You are if you are navigating through tough times in a corporate or navigating through changing times in a corporate, what you do is you look inwards. You build your resources, you build your infrastructure, you focus on reducing your overall extra expenditure, and you look at the future, you look at the ecosystem around you. How do you make yourself more resilient? How do you make yourself ready for the future? And I think that is the kind of intent that this government has shown in the budget. They have not been populist. They have not been very much like a lot of people were expecting capital gains tax cuts and others. They've not been that populist. They've in fact focused on the infrastructure creation. They have focused on reducing or keeping the fiscal deficit in check. So I think it's a very strategic kind of a move in a world change scenario where manufacturing becomes fairly important, where your infrastructure becomes fairly important, where your resources becomes fairly important. So I think it's a very decent step. It has been more tactical in terms of what the situation is in the world economy versus a very populist kind of a budget. Although in the budget we saw some sort of things which were actually not anticipated, like the STT that was there, and markets reacted a lot, especially in the initial 2 days post the announcement. And uh, obviously, this is something which is not warranted. I think you should not make frequent changes in such things, right? Like if you are not giving a clear-cut vision of what exactly the taxes are, this creates a problem. I think policy continuity is very much important. You should have given Ideally, you should give a 5 years roadmap that, hey, for 5 years, I'm not going to change the taxes that much. I think the markets are not liking the kind of change in stance again and again on this. So there was definitely a reaction on this, and this is obviously not warranted. But if you look at many significant other announcements, the kind of opportunities that they are creating in the economy. Next slide, Kavya. So, yeah, next slide. So we are seeing that defense, and like if you look at defense and aerospace, I think this is some sector where we've been trying since a lot of years to insource defense and technology and aerospace, but we've been made able to make inroads only off late. Right now, if you look at the defense sector, we are not only making in India, we are also exporting to many of the other nations, which like it could be Vietnam, it would be many other nations, right? So we are not only making in within the country. There are a lot of defense equipments that are being made within India. Even if you look at today's headline, the government has passed a budget of 15,000 crores for making aircrafts, defense aircrafts, and L&T, Tata, and Bharat Forge have been have participated in this, and they have been selected to move to the next step. So the budget allocation towards defense has significantly increased, and that's so what is warranted as per the current situation. We've seen a 4.9 lakh crore from a 4.9 lakh crore, it has increased to 5.9 lakh crore. So significant 20% plus kind of a move, that increase that has happened in the budget in terms of defense and aerospace. And this creates a lot of opportunities. A lot of domestic players are there in the listed and to be listed space, which are doing fairly well in this, and they've already made inroads. They've already done like established their technologies. I think it's time for a lot of these companies to scale up. And the larger players are there, the small players are there, dedicated players are there. So I think it's a fairly significant opportunity that has been created with such a big spending on defense, and this is going to continue over the coming years with the kind of geopolitics that is evolving. Next slide, Kavya. So I think if you look at other key sectoral allocations, have been fairly good allocations across. Like you've seen infrastructure push overall for toward 12.2 lakh crore kind of an infrastructure creation. I think definitely execution is the key here. What you say, you have to execute. A lot of budgets that they announce, the budgets are not utilized. But if you look at like PLI has been a fairly big contributor to our economy and manufacturing over the years, and I think increasing commitments over there in auto sector, in electronic sector, in manufacturing has been there. There have been reduction of customs duty on imports on various critical items. There have been nuclear power generation. There have been import holidays. There have been waterways that the government has focused on. 20 new national waterways. They are intending to make them operational. green transition is continuing. Obviously, energy is very critical when it comes to the economy. So, if you look at this from a holistic standpoint, we are thinking about the future. We are thinking about data centers. We are thinking about technology. We are thinking about our infrastructure, and we are also, in a way, doing this. Funding this in a manner where the fiscal deficit is in check, where you are monetizing through REITs and InvITs, and you're thinking like a corporate, right? You need not go all out like what is happening in the rest of the world. You print as much as you want, you go as much deficit as you want. In that kind of an environment, we are reducing our debt to GDP, and it's a very unique kind of a scenario we are going towards. But infrastructure creates a lot of opportunities. And next slide, Kavya, we see a lot of companies which are going to benefit. Sorry.
So maybe Divam, we
We
can
are,
take that a little
yeah,
while later. Maybe we
yeah,
just
sure, sure.
just complete the picture of what is in the budget, and then
We are going to see
move
a
on
lot
to.
of sectors. Yeah, quickly, we are going to see a lot of sectors which are going to benefit from this. Textile is very big beneficiary, and we've seen India-EU deal coming in that direction. Textile is going to be a beneficiary. There are a lot of other sectors, auto, data centers, defense, infrastructure. So I think the kind of intent that the government has shown, a lot of sectors are going to be beneficiaries from this kind of evolution. Yeah.
So maybe we'll come to those specific sectors in a bit, Divam. Um, but and thanks for sharing that. Actually, I take one thing from your conversation, Divam. India is thinking like a corporate. So have low debt, manage your balance sheet well, manage income expenses well, invest in the areas that are needed to sort of secure the future. So invest in the right sectors. So, Shashank, you had shared, six problem areas, right, in your last context, and you shared some continuity, how those should be addressed. So, how do you see those addressing, and specifically, what do you like or dislike about, what you're seeing in the budget?
Okay, so I'll quickly run through some of the interesting things that I saw in that budget document, right? The first one was that the Ministry of Coal had an increase of budget of 626%. Went from 300 crore budget to almost 3,500 crores. Now, this was mainly driven for promotion of coal and lignite gasification. So the FM had a target of 100 million tons by 2030. And even today, India, whether we like it or not, coal is a very big, factor for our energy mix as of today, right? So even today, I think 55% of the entire national energy mix is through coal itself. But one good thing was last year, India's coal industry actually mined a lot, produced a lot of tons, and that is why our imports went down quite a bit. So this is actually very good for our national energy security, and this is also a stepping stone for us moving slowly into the renewable energy mix that we see soon, right? One thing that I also track a lot is that Ministry of Power and the renewable energy sector. So here again, very quickly, I'll talk about a few things. 37% increase in the expenditure, which is a good thing. We see finally BESS getting some notice here. We got the viability gap funding, VGF, coming on guest for BESS for 1,000 crores. And one thing that I think they've been talking a lot about was the revamped distribution for RDSS, which is mainly your discoms are in a lot of loss right now. And I think last year they started this program where they're starting to move the discoms into a profitable zone. I think that has slowly started. We also saw that they're announcing a potential merger for two companies in the space. So that is something that we're very keen on looking at. When we talk about the renewable sector, which is I think in the next slide, we see that PM Kusum Yojana has gone up by 2x. And even the Surya Ghar Muft Bijli is also gone up by around 11%. Most of the budget allocation went in these two factors. Solar power got a little bit of upgrade of 20%. But overall, I think it was not very heavy on renewables, more on the traditional energy. And if we look at the US-India deal as well, we see a lot of energy coming back, the traditional sources of energy coming back over there. One thing that I really like was under the Department of Heavy Industries, we saw the PLI for auto and autocom going from 3,000 to 6,000 crore. Now, this very bullish because both in the EU deal or if it's the US deal, India autocomp industry is very embedded in both these continents, and that is something that will work really in our favor for us as well. And this will actually boost a lot of autocomp companies in India going forward.
Great. Thanks, Shashank. So, Sanjeet, going to you, what themes do you see continuing in the budget thinking, and what strategic shifts do you see in the budget?
Sure, Pankaj. So, infrastructure is something which government has continued. Earlier, it was airports and roads, and now it's small tier one, tier two, and tier three cities. Government has realized that major cities are now congested, and everybody wants to come there. So, it's not really a viable solution. Look at Delhi, look at Bombay, look at Bangalore, right? So, tier two and three cities are new growth centers. We will have to see how this growth happens, whether it happens through municipals or it happens through private sector. So that will be a theme to look at. Manufacturing, government wants now to move from just electronic components to the whole electronic equipment. So there is a push over there, and there might be incentives coming there. And all legacy industrial corridors again should be somewhat linked to tier two and three cities, which lagged and didn't grow, and all corridors which were industry centers have not been focused and will grow now. Green energy is still a focus. Green hydrogen, EV, solar, this has continued from the past 5 to 10 years. And because government wants to be, yes, more reliant inwardly and less reliant on resources it has to import. So we see a tax modernization, the new tax code coming in. So one of the things which government has continued is that, of course, they keep messing with the other taxes, as it was mentioned earlier. But yes, the tax modernization comes, so might be taking focus of people from doing income tax cases to actually doing work. And social spending also is in line. There is a good not populist agenda going on, and what they have done is that they've shifted some of the responsibility from the center to the state, wherein the local government is more a part of it. Next slide, please. So there has been some strategic shifts, and these shifts, major changes are the tax code, the share buyback. The share buyback will see some bit of new engineering, financial engineering coming around, how promoters now participate and buy back the shares, or how wealth is distributed back to the promoters. Of course, STT hike. This will probably affect arbitrage and hybrid funds in the short run. As I said before, it is a win-win for the government. Either people speculate less, or the government makes more tax. So new initiatives is Biopharma Shakti, India Semiconductor Mission, Rare and Earth Corridors, and Orange Economy. Orange Economy is going to be interesting. There's going to be a whole new sector of companies which might float into this and might support government for those creator labs, and a whole section which was ignored earlier might come up again. So state shared responsibility, custom duties have come down, direct taxes are ignored. So this is what has been sidelined. That no more populism, no more giving you back, or you have to do it on your own is what the government is looking at.
Great. Thanks, Sanjeev. So, a quick, my takeaways. So, what continues is that, the tax regime optimization or reslabbing that continues. No more changes. There is little less populism, which is good, and a lot more investments going in defense, aerospace, power, transportation, semiconductors. Also, there are some new sparks like semiconductor, biopharma, rare earth. I don't think we've had these themes come, in as much prominence in the previous budgets. And a lot of infrastructure push, a lot of manufacturing push, and hoping things will get better, with these, trade agreement with the US and Europe. So that's a very good, backdrop for what has happened in the budget. So now the last most important part, what's the consequence of this on an investor? So really, how should this affect, the portfolio level decisions of investors as well as fund managers? So really, what are the new investment themes arising? What gains emphasis? What loses emphasis? That kind of conversation. So Divam, back to you. What actionable investment themes do you see?
Yeah, I think very quickly, we have seen, we have to see this in context with what is happening across the globe. And how FTAs are happening, and how the budget is placed. So I think textile become a clear-cut beneficiary. We used to see Pakistan, Bangladesh, like countries exporting to the EU at zero duties, and India used to supply raw material to Bangladesh, etc. Now with India also getting 0% duty, I think textile becomes a clear-cut beneficiary. In the budget, as always, we see. Seafood also getting benefited, and even in the FTAs with the US and EU, I think this becomes a clear-cut beneficiary. Defense, infra overall, with the higher allocation, becomes a clear-cut beneficiary, and obviously a lot of incumbent players are going to benefit out of it. Electronics has been a amazing performer. For a lot of domestic companies have done fairly well, and I think. A lot of export opportunities as well as domestic consumption opportunities are there in the sector. Likewise, commercial vehicles with the increase in infrastructure expansion. So overall, the theme is infra, and overall the theme is the trade deals that are happening and the beneficiaries out of them.
Great, Devam. Thanks a lot. So the theme is infra. The theme is, what going to benefit from these trade agreements. Shashank, your take?
So I have three themes: short, long, and contra. Right. So the short theme I would say is auto. I think we're very well placed in the auto for at least the next few years. A longer term theme I would say would be aerospace. I know a lot of people are talking about it, but I feel this will play out over 10 years. It is not a theme for today, tomorrow, day after. This is a building block kind of a system. So aerospace will be a very long term theme. Wealth management, I feel, is a contra theme because yes, India will become rich, per capita will go up. Today, all the stocks are battered and going down because of the news. So I feel this is overall, if I look at it from a long-term standpoint, it is a very good free cash flow business, nice cash flow coming in from there, good operating margins, good leverage. The leaders will take most of the market share, a lot of space for disruption coming in. So I think these are the three ways I would look at it. Wealth management would be contra. How do we position ourselves? I mean, see, I know a lot of investors would love to go heavy on small and micro because that's what they've been doing all the time. Everyone is a long-term investor until it falls 20% in their portfolio. And most retail investors don't understand this, that small cap and mid cap is great, but you have to have the conviction to hold in those bad cycles, right? So I think for them, people who cannot digest such a hard dip, it's better to just go with large mid. I think there are good opportunities up to 25,000 crore market cap. You can have a balanced PF over there and look at metals only as a hedge because metals have become very volatile right now. Going up 4-5% is just unheard of. So use it only as a hedge, as a small percentage of your portfolio. Don't use it as another stock play that you would normally play around. So this is how I would categorize it.
Got it. So basically, short term is auto, contra is wealth management, and in between, maybe tendency towards large, less towards small and mid. That's how you sort of see this evolving. And of course, the bullion, the metal is only as a hedge, not as a permanent trade.
Yes.
Great. Sanjeet, in your view, where is the opportunity and where is the risk? Sanjeet, you're on mute.
Thanks. Okay, so the four global themes we saw, the first one was protectionism and tariff wars. So, from there we have had a reaction where, you have marine and seafood being incentivized, leather, footwear, we had shoemakers, completing that, their products which they sell to the US were very expensive, made by the US. And so there have been incentives introduced there. Important are renewable energy because energy is a big key theme for India and it will remain for the next, maybe a few decades. Civil defense and aviation, consumer electronics, critical minerals and rare earth metals, because we are not, we don't have our own resources, we need to develop those. We have to find them and we have to mine them. Supply chain, back to design and IP plays, infrastructure, fabrication, again, biologicals and biosimilars, key for such a large population to keep it healthy. You need to not to be importing those APIs, but probably be making them, or at least have the components to make them. Chemical manufacturing. One more key theme, which even Shashank pointed out, was that we missed the AI race. So we are now focusing on the cloud race. The government is putting policy also, pushing internally the regulated entities, to have their cloud and data space within the country. So that should be coming up. Of course, critical minerals once again, because if something stops, then the whole the electronic world stops, and that we can't do ahead. Next slide, please. So defense modernization, again, because of the world being a rough place, we are going to spend money over there. We have been importing a lot of defense equipment. So it's good time now to make it in-house. And more importantly, the electronics need to be made in-house, because if you are in a war with a country like China and they stop their chips, then you are mostly done with. So the brains of the warfare have to be made inside. With the countries next door, we have seen that drones have become more and more important. So drone warfare and aerial warfare, where men are not going, when machines are going, is going to be important. And of course, rare earth corridors. Once again, metals, volatile. Why? Because it affects everything. It affects your munitions, it affects your EV, it affects your components, magnets, motors are not made, and mining and processing are going to be important themes which investors need to look at. So next slide, please. So in this all context, investors of course need to watch for risks. Global tensions. What if the global tensions de-escalate? What will happen to gold? Will it go up or down? Yes, all the governments are collecting gold, but whether paper gold can be traded by the investor in a safe way or not is much more matters. Tariffs, we saw tariffs were there on the budget day and then they were not there, a day later. So, will those custom duty tweaks actually move into sectors and move into stock plays? Financial prudence, can government meet its targets? It has shown that it wants more SGT. It wants you to keep speculating or maybe speculate less. What will happen to the rupee and the dollar? Trade deal went and dollar went, and so that really affects the price of gold in India. So FIIs, they want them back, but will the measures to get them back work or not? They are important FIIs because the trend of the market, which has been sideways, for the last year and a half, will change only once the foreign money comes in.
Great. Thanks, Sanjeet. So, what I gathered from you is a lot of investment thinking is driven by, how protectionism would evolve, how insourcing versus outsourcing will evolve, and the defense modernization, the themes that are emerging more from global sort of geopolitics, the ongoing initiative in manufacturing, etc. And of course, there are risks. So thanks for sharing that. Now we are on the last section, which is question and answer. If anybody has any question, we might have time for maybe a couple of those. So if you have a question, I request you to just type it in the chat window. And until those comes, I have some question for you, Divang. So you mentioned that the world order is changing, right? Perhaps on many fronts, right? So like there's economic order, the GDP order changing among countries, the monetary order is changing, whether USD will remain reserve currency or not. Trade tariff, is a 24-hour cycle, so it goes up, down, and we don't know where it's headed. So in this, how do you see, what scenarios do you see, right? So do you see any party or country or any sort of things that might gain or win? And so what kind of who might win, who might lose this? So do you have a view on that?
So, yeah, Pankaj. So, I think I'm going to take 2 minutes for this. I have a lot of thoughts around it. So, we are moving to a globalized world, from a globalized world to a deglobalized world, where it is more one-to-one trade kind of transactions and an FTA kind of ecosystem where the world is moving. So, if you look at the overall ecosystem, there are some themes which I would want to cover. So, we are going into a managed polarity where big powers are competing, but with guardrails, right? So, there are selective controls, there are selective sanctions, and selectively there are the big powers are competing. Primarily, if you look at the US, the China, the Russia, etc. The global growth is holding up despite sanctions. This is a very interesting fact, and that means that the systems are adapting, then collapsing, right? So we are not seeing collapse of systems. We are seeing systems adapting, and despite everything, systems are growing well. We are seeing so the economies like India, which are like connecting economies where we are doing FTAs with the entire world, are going to benefit, and the smaller economies are going to lose, who do not have access to exports or not developed, etc., etc. So in another interesting thing that is coming up is the trade fragmentation, right? So we are looking at some trades which are tariff and some trades which are non-tariff, which are standard, right? So there are different baskets of trade that is happening, and this is again something fairly interesting. So the companies and economies which are able to adapt in this kind of ecosystem are winning, and the countries and companies which are not able to adapt are losing, right? The third thing that I'm seeing is tech. Right, tech is also very fragmented. Right, there are some certain countries who are having their own dimensions of that. Hey, I want software like this. I want local sourcing. I want like local compliances, etc., etc. So countries, so the companies which are adopting to this, or the countries which are adopting to this ecosystem in terms of the new technologies, are winning, and the ones who are not getting access are losing. Right, critical mineral securitization is again a very important thing, which is becoming important in terms of differentiation of which country is going to win or lose. Finance is being weaponized, right? You're seeing de-dollarization, you're seeing BRICS currency, you're seeing others. So again, this becomes a tool, and countries who are adopting very fast in terms of their technology, in terms of payment system, in terms of their currencies, are winning, and the others are losing. Again, geopolitics is choking supply chains as well as the trade routes, right? So if you have access to supply chains and trade routes, you are winning, and otherwise you are losing. Right. So quickly, the winners would be someone who would have manufacturing access, who would have energy critical mineral access, who would have defense cyber security access, who would have countries which can master compliances. The countries which would lose would primarily be single market dependent exporters, less developed economies, consumers, firms stuck with tech and commodity controls. So you have to look at the access to markets, you have to look at tech, you have to look at resources, you have to look at shipping security, you have to look at currency resilience, you have to look at manufacturing when it comes to like trying to identify who would win, and which companies would win, or which countries would win in this kind of a evolving geopolitics.
Got it. Got it. Thanks, Divam. I have three questions on the chat. The first one is, given the budget, in light of the budget, uh, should investor tilt toward large caps, mid cap, or small cap, or thematic play? Can you take this, Sanjeet?
Yeah, I'll take that. Okay, so we are not very fond of pure thematic plays because there is always a risk of some theme not working out. So for investors, you should ideally mix two or three themes and make your portfolio. And if you have a fund manager who does that for you, that is even better. Some themes will not always be available in large caps or mid caps. So you, for an investor to participate in some themes in some sectors, you will have to go to mid cap and small caps and micro caps. So in this scenario where the budget, if you want to play the budget, then you'll have to have club, three, four themes. You can club rare earth, defense, supply chain, and have a diverse portfolio. But you will have to see what risk you want to take, and then not just focus on just large caps, because large caps will not always have all the companies which, are going to play those themes.
Got it. Thanks, Sanjeev. So I have one question about these trade deals, specifically the India-US deal. So where will the net growth dividend for economies be, right? So, and what are the main risks? So in other words, how is the value getting created, and what are the risks from this US-India trade deal? So Shashank, would you like to take that if you have a view on that?
Yeah, I mean, look, we were always trading with US in the past. There was nothing new or different about it. It just came in a small way where we, kind of got questioned saying we have the deficit, surplus, etc. So we were always trading. There was nothing wrong with that. Right now, we are pushed to trade more natural energy sources. That's also because of your geopolitical Venezuela incident and all of that, right? See, we are and we were making a lot of money from IT. That continues because major part of our IT segment is mostly embedded in the BFSI space in the foreign countries. Now, yes, there is a lot of news about cloud coming in, AI coming in, disruption happening, and our IT companies are taking a hit for that. But I don't think Bank of America will use cloud cowork to manage their systems, right? I don't think that's going to happen. So, is it a disruption? Answer is yes. Is it going to have a direct impact on our IT? Answer is no. But do we have to change something? Answer is yes. I think most of our money comes from US deals are from IT itself. So that is something I would say still continues. There's nothing changed there. But I don't think it is growing exponentially as it was before. IT services was there in the past, which was great. I think now things are evolving, things are changing. Manufacturing is the only thing I would say is a net benefit for us. That is improving desperately. I mean, not desperately. I would say that is improving very well because look, US is not going very deep into China. China doesn't want US. What's the alternative in the world, right? You have Vietnam, you have Bangladesh, you have India. As Devam mentioned about textile, Bangladesh is having their own problems in the textile space as well. Vietnam is still a proxy to China. So India definitely comes off as a good person, high skilled labor, smart guys, and good corporate governance. I think these three will be the key differentiator going forward. And it will be a net win for India on the manufacturing side as well over time. It will take time, but it will start.
Right. So I have a related question because there is an angle of technology in this, right? So do you see Indian IT going, how do you see Indian IT going forward? Should investors add IT during declines?
Yeah, I don't think there's a huge problem that is making it look like it is, right? I don't think there's a crazy problem. In fact, most of the companies that are coming to India, whether it's GPT, Claude, everyone, they're all trying to do partnerships with XYZ Indian company itself. With the data center capex going live very soon, I think Indian companies are there. See, what narrative has actually got spoiled. If you see the profit and loss statement, it is pretty okay. You see their balance sheets, they're completely fine. The narrative of Indian IT has got a little spoiled because we were behind the curve. As I said, the AI race miss. And if you look at the recent, let's say TCS, you take as an example, not as a recommendation, but if you look at their recent presentation, everything is filled with AI. It's called AI services now, right? So they've added AI everywhere with the same notion. So it's just a narrative switch. Yes, they do have to do something. They have balance sheet. Please use it to some actual use case. You don't have to make the next GPT or Claude. We don't expect that from them. We expect revenues and we expect things to grow. So position yourself in a way where it works. If you look at US, this is something they're doing very well. If you see there's a company called ServiceNow, which was mainly a service company in this space. Now they have tied up with Claude to make enterprise solutions, right? So I'm pretty sure we won't be able to replicate what they're doing, but we will definitely start partnering up with people and getting some value creation coming out. Because all I would say is, if not us, who else? That was my only final answer, right? Will US trust, let's say, banking systems to go on China IT? I don't think that's going to happen. So we don't have a replacement theory yet. So let's see. As of now, I'm okay with it.
Great. Thanks, Shashank. And thanks, Alex, Sachin, Harris for your question. So that brings us to the end of this session. So thank you very much. Thanks to all the participants for making time for this discussion. Thank you so much, all my panelists, Divam, Sanjeet, Shashank, for your time and your insights. I really hope this was useful, insightful for everyone. And thank you for joining, and hope you have a good day ahead. Looking forward to meeting again. Thank you so much.